Today we're talking about Palantir Technologies, one of the hottest public listings of 2020. You've probably already heard about this company from a variety of different YouTubers or maybe just on the news in the past year. By the end of this video, we're going to cover what does Palantir do, their juicy financials, their stock price performance, catalysts for growth, and finally, valuation and risks. We have a ton of research to get through which took many hours to compile, but first I want to share a chance for you to win up to 5 free stocks worth up to $3,500 each. And that's thanks to the sponsor of today's video, Moat. Terms and conditions apply. For a limited time, if you deposit any amount, you get 2 free stocks each worth up to $3,500. And deposit $2,000 and get another 3 stocks also each worth up to $3,500. Make sure to use the link in my description to participate. Aside from the free stocks, Moat is a commission-free trading platform with over 17 million traders already on the app. They make trading easier because you get just about all the information you need to make an informed decision all in one place. In other words, they're a one-stop shop when it comes to trading platforms. Once you've downloaded Moat, you'll have access to real-time market data, level 2 quotes, heat maps, news feeds, stock screeners, and a bunch of other pro-level trading tools. For example, their AI-powered capital tracking tool allows you to visualize capital distribution or the inflows and outflows of different funds from major forces in the market. And you can rest easy knowing they do not make money from payment from order flow, unlike some other platforms. Again, for all of you, my viewers, Moat is offering a very special deal. For a limited time, you'll receive free stocks worth up to $3,500 when you open an account and deposit any amount. And you can get another 3 free stocks with a $2,000 deposit. So make sure to click the link down below to get your free stock on Moat. Alright, back to the video. Palantir was founded in 2003 by a group of entrepreneurs and computer scientists, including Alex Karp, the current CEO, and legendary VC Peter Thiel. The company started by building software for the intelligence community in the United States for counterterrorism investigations and operations, and later they got into working with other businesses. They are a big data company tackling the world's most complicated problems. Right now, the company has 2 main products, Gotham and Foundry. Let's first talk about Gotham. Gotham is its first software platform that was constructed for analysts at defense and intelligence agencies. The company saw that these agencies in Afghanistan and Iraq were searching for needles in thousands of haystacks and didn't have good enough technologies. So they built software that allowed users to identify patterns deep within datasets, from intelligence sources to reports from confidential informants, and they helped the military find what they were looking for. It's now used for defense operations and military missions plannings too. Palantir is largely rumored to have been part of several massive counterterrorism measurements. Their second software product is Foundry. Foundry is their software that was created for commercial use, and this is for customers who face big datasets and complex problems, like really complex. For example, an Airbus 350 has 5 million parts built by hundreds of teams spread across 4 countries and more than 8 factories. Foundry simplifies this crazy process for companies. This Airbus example was the main example given in their public filings, but they're intentionally secretive about the other things that they do, and this kind of comes into play later in the video when we talk about their risks. What's really cool here is that Palantir is not creating, mining, or collecting any new data. It's really using the data of the end users and allowing them to maximize and make sense of all the data that they have. As of September 30th, 2021, Palantir had about 203 customers, including some of the most significant and prominent institutions in the entire world. These included entities from the US Army to our world's leading auto manufacturer, as well as other key industries like financial services, energy, consumer, healthcare, and others. These customers are also located across 40 industries in over 150 countries. By the way, I thought I would mention that our fundamental analysis mentor, Nick, who has a day job as a senior wealth management analyst, actually did a multi-part case study on Palantir for the members of the investor community. He also just did an hour-long deep dive into MP materials for the members, and next up is Lending Club. That's right, Nick, who's a finance professional, is going to put me in the hot seat and analyze Lending Club. Check out investor community down below if you want multiple in-depth deep dive stock analyses from Nick every month. Palantir's management has also made it very clear that they want to grow revenues extremely fast. I mean, which company doesn't? In fact, they have a documented strategy specifically for Foundry on how they're going to acquire and scale new customers. And it's broken down into 3 steps. You'll never guess them: acquire, expand, and scale. Through the acquire phase, they are actively in discussion with existing and prospective customers. They usually will start with a short-term pilot deployment of their software to customers at no or low cost. That way, they prove the value of their software first. Customers in this group generally don't make much revenue for Palantir initially, but they they grow very quickly in the following years. For example, in 2019, Palantir generated 0.6 million in revenue from customers in this phase. But in 2020, the following year, those same customers generated a whopping 77 million in revenue. That said, their acquisition strategy is very expensive and has a lot of upfront costs in those pilot programs, free trials, and the support and working closely with the customer to customize the software and make sure it does exactly what they want it to do. But the next phase, expand, well, that's when they seek to understand the principal challenges faced by these customers. Once a company hits 100,000 in revenue, but it's operating at a loss, they're considered the expand phase. In 2019, they generated 176 million in revenue from customers in this phase, but in the following year, 2020, the same customers generated 360 million. The biggest value proposition that Palantir is trying to get here is to solve the client's problem data. Each one comes to them with a different, unique problem, and by compiling and harnessing the client's data and figuring out how to extract the necessary information to get to the customer's needs, they can add a huge amount of value. Think about the Airbus example we gave before. By getting Airbus to the point of coordination across countries, plants, and millions of products, they were likely saving a ton of money. And finally, the scale phase. So as customers mature, Palantir's cost to the company tend to decrease while the value significantly increases. At this point, Palantir has already installed and configured the software to the customer's needs, and the customers are more self-sufficient with using the product. Once the account hits a positive contribution margin, a fancy way of saying it's profitable for Palantir to work with them, they're moved to the scale phase. As you can imagine, all their clients have a different pace of getting to the scale phase, but getting there quickly is critical to the long-term success of Palantir because this sales cycle is so long and has so much of those upfront costs. Palantir will need to scale, and you're going to want to see how quickly they're able to move companies and new clients through to this phase, especially when they start expanding to smaller businesses. Palantir has set some lofty goals for itself in terms of growth, and this is going to be crucial as to whether or not they can hit those. Another important thing to note when it comes to Palantir is that they have picked sides. Their software is used strictly by the United States and its allies. Some competitors to Palantir do work with the US and its adversaries, but Palantir does not. When discussing its moat, the first one to bring up is that they were simply a first mover in the space, which gives them a competitive edge. And that quickly means that number two, they're becoming the go-to product for the US government and its allies, giving it extreme credibility. And finally, their third advantage or moat here is having a star-studded management team led by billionaires Alex Karp and Peter Thiel. In the government space, I would actually argue that they don't really have many competitors, and that's for Gotham. But in the commercial space with Foundry, I would argue that there are a number of high-quality big data companies that have the ability to compete with Palantir, some of them shown here. The biggest differentiator for Palantir is their credentials and small list of incredibly high-quality customers. This was a big reason for their buzz around their initial direct listing, and as long as they can deliver on a quality product, that should attract more quality customers. The industry that Palantir operates in is also huge and growing very quickly. A report by Fortune Business Insights notes that the big data technology market will grow 14% per year through 2027 to a total market of $116 billion. This essentially means that it will double in the next 5 years. Today, Palantir is doing about $1 to $1.4 billion in revenue, which means if you're looking at that 2027 projection, they have about 1% market share, leaving much room for growth. And that's a perfect segue into their financials. If we start with the income statement and cash flows, in 2020, the company generated $1.1 billion of revenue, and the first 9 months alone in 2021, the company generated the same $1.1 billion of revenue. Palantir does continue to operate at a loss given its desire to grow quickly. Very quickly. But the rampant new customers and their ability to grow revenue based on existing customers, that whole sales cycle we talked about before, that has led to the first 9 months of 2021 only being a loss of about 350 million compared to $1 billion in the first 9 months of 2020. Cash flow generation also continues to be strong with cash flow from operations of 109 million. That's nearly up 300% year over year. And when it comes to their balance sheet, all I've really got to say is that they have a solid balance sheet. They have $2.3 billion in cash on hand and essentially no debt. This is all as of September 30th. They do not pay a common dividend, so they are set up to continue investing back into the business. And now we can highlight what has been the crucial point of a lot of this video, their customers. Palantir has grown its customer base from 169 at the end of 2020 to 203 as of the end of Q3 2021. In Q3, Palantir signed 54 deals over $1 million, of which 33 were greater than 5 million and 18 greater than 10 million. These growth numbers are pretty consistent with their Q2 signings, and this is good stability. Further scaling of revenue into their customers, I should say, continues to be strong, with the average 12-month revenue from the top 20 customers growing 35% to $41.3 million as of Q3 2021. Year to date, up through Q3 2021, so this data is a few months old, Palantir derived about 59% of their revenue from government agencies, with the remaining 41% coming from commercial businesses. The company is always looking for new customers to add to their software, but importantly, they started expanding into more early stage companies, even startups. Now, if we take a quick look at the stock price performance since its direct listing, the stock is up a whopping 80%. What is even more wild is in the excitement post-listing, the stock shot up almost 300% to its peak, and it hit that in late January 2021. A lot of the excitement here was mainly a result of the significant media attention that Palantir received, also driven by the type of work the company does with the government and other organizations. It definitely hit the meme stock type of crazy as well, which ended up having a lot of retail investors pouring money into it as well, which of course probably triggered some algorithms, some other funds to follow suit and just keep pumping up the price. While this resulted in the stock turning into a rocket ship first few months after listing, it finally came back down to earth and is actually down about 50% since that peak. Today, the stock is still incredibly volatile and it looks like it is still trying to find that base. Analysts on Wall Street seem to be in a wait and see mode for Palantir. A lot of them are probably holding out to update any of their opinions until they see a full year-end 2021 numbers, or some more stability in the financials. More than 1 year of public filings would also help as well. As of now, most analysts have either a hold or sell rating on the stock, but the average price target is 30% higher than where it's currently trading. It will be really interesting to see how the stock trades after their upcoming Q4 earnings. If you guys are enjoying the research so far, please feel free to hit that like button and subscribe. Stick around a while. I'm trying to hit 10 uploads a month, so let's see if we can do it. All right, so now onto the key drivers for future growth, the first one being government agencies. In 2016, Palantir won a lawsuit against the US Army, which made the Army consider other commercially available products before trying to build their own. As a result, the Army selected Palantir's products to deploy. This is great for Palantir because if the government agencies continue to grow, which they probably will, they have to look for a commercial vendor first, and as long as Palantir can remain the best product available, they will continue to serve these government agencies. Palantir has also penetrated into other parts of the US government, for example, the FDA, CDC, and National Institute of Health, among others. If they can continue to grow its government business and remain the best default provider to these agencies, this could bring significant revenue. Next is the commercial business growth. The company has established a direct field sales team, which is out looking to prospect new commercial businesses. As a result, commercial customers grew 46% in Q3, and total commercial customers have grown 135% since December 2020. The third growth driver is actually their own financial metrics. When they were looking ahead, the company gave some pretty significant goals for the full year 2021. And this long-term outlook, this forecast, is some of the most important information when it comes to influencing analyst price targets. If these metrics aren't hit, that could lead to a lot of volatility. And if they are hit, that could also lead to a lot of volatility. It's Palantir. So in Q4, they expected revenue of $418 million, which would be a 7% increase from Q3, so quarter over quarter. And the full year numbers show pretty staggering revenue growth with free cash flow growth as well. The biggest number on this page is the 30% revenue growth for this year and the 4 more years to follow. This means the company is setting really high goals for itself, which may be hard to achieve, but if they can deliver, this could be a beast of a stock in the years to come. Now, a quick look at their valuation doesn't make this a screaming buy at the moment when looking at these metrics. That said, this is all at a glance. I have heard Palantir bulls reference their free cash flow as a better way to value the company. Their valuation snapshot, as seen here, tells me, of course, it's way cheaper than in March 2021, but a 16 forward EV to revenues is still a bit high for a new position, at least in my portfolio personally, especially when my valuation is my main focus going through 2022 and this new environment that the market is in. But again, there might be a better way to value Palantir, so don't take this as trading advice. In fact, of course, you never should. All right, what are the risks involved for Palantir? The final piece of the video, let's get it. Commercial growth, believe it or not, which we also mentioned as a key driver. Here's what I mean. This is a company that tackles extremely complex problems that's now trying to enter everyday industries. So in this process, they might see a few hurdles. Again, we're seeing them branch into these startups or early stage companies, which may take a while to become fruitful and profitable clients and reach that scale phase for Palantir. I think there would be a concern that adding these smaller businesses won't be as beneficial to Palantir as continuing to focus on their massive, smaller list of extremely high volume, high quality, and high paying clients with the most complex problems. Another risk is the growth rate of government revenue. So government revenue is really considered the foundation or bedrock of this company's financials in my personal opinion. Now, government revenues did grow 34% year over year according to Q3 2021 data, and that's great, but that is also slower than the 66% growth rate in Q3 2022. So since this is such a massive part of the company's revenue stream, a prolonged slowdown in growth could be a potential issue. Next up as a risk is disclosures. Now, the company has always been very secretive with their customers, what they do, and how they do it. And this makes sense given the highly confidential and sensitive nature of the business that they're in. Wall Street analysts, however, and Wall Street in general, they do not like uncertainty, they do not like privacy, they do not like a lack of transparency, and this could lead analysts to be a little more hesitant on their price targets. Also importantly, the founders continue to control the company through a multi-share class structure, so they are the ones who are able to drive the future of the company, and other investors will have limited voting power, so keep that in mind. And finally, the risk that kind of sums up everything we've been talking about, the potential to develop into a niche market and really not turn out to be as scalable as they anticipated. You know, what if it turns out that not that many businesses out there, or at least not as many as expected, have such complicated problems as building an entire plane through multiple countries or tracking counterintelligence throughout the entire world? If they're going to hit that 4-year goal of 30% revenue growth annually, they're going to have to find revenue growth outside their existing customers. And again, for the last time, I'll mention their long sales cycle, high upfront costs, and their other competitors in the commercial space. Make sure to check out Moomoo in the link in the description below to get some free stocks in a limited time deal, and check out the investor community again if you want to see Nick do an analysis on LC, my favorite stock right now, coming up in the investor community. Nick does multiple of these sessions every month, and they're free for all members of the investor community, so check it out, and I'll see you guys in the next one. Subscribe.